there's no one better to talk about it than Tim Chang, a partner at Norwest Venture Partners. Tim has led the firm's investments in mobile and social gaming, and great to have you back here on Bloomberg West. So we haven't talked to you since Zynga filed. How big do you think Zynga is going to be?
I think Zynga is a spectacular company, and when you look at it, I actually don't think it's a games company. I think at their heart, they're actually an analytics and distribution company. They started with games, but in theory, with that network and distribution power, they could go into other areas of digital media, deals, commerce. I think starting with games is pretty brilliant, but that distribution network is the real gold that they've created. One
of the things we picked out of the filing is that insiders have sold hundreds of millions of dollars of shares already. Is that a red flag at all to you?
No, I mean, in today's market, you'll see insiders, you'll see employees who have left, you'll see liquidity for early investors as well as insiders. It's becoming pretty commonplace these days.
Now, you just got back from a big gaming conference. There's a lot of stuff going on in this space. You said, darn you, PopCap, for keeping valuations in games frothy for the rest of the year. PopCap, of course, just got bought by Electronic Arts. Are the valuations too high right now?
I'll put it this way. I'm a net seller of my companies right now. It's definitely very frothy. The valuations are very high. Entrepreneur expectations are very high. But for good cause. We've had great exits. PopCap proved that studios can get enormous valuations. We had a bit of luck with Disney buying Playdom, DNA buying NG Moco for some pretty big amounts as well. So the valuations are high, and everybody's looking at the price they can get. But at the same time, I don't know that I'd want to be jumping into this fray now, making new investments at high valuations.
And why is that?
I think because as hot as the market is, we're in a state of consolidation. Let's rewind the clock a year ago. We still had virality on Facebook. The markets, the applications weren't as crowded on iPhone and Android, right? And so it's a different landscape than it was today. Zynga, some would say, has sucked the oxygen out of the social games 1.0 market, right, in terms of distribution.
So will there be another Zynga?
For my money, I would say there will not be another Zynga in casual social games. Good news, we're going to have new regions, new platforms, and new genres to explore, but we're not going to have any other Zyngas for, let's call it, social games 1.0.
So how about in mobile?
In mobile, that's the new battlefield these days. There is no Zynga of mobile because nobody has that distribution muscle that Zynga created on Facebook. We're all scrambling for it. NG Moco made an early play, and that's why DNA picked them up, but you've got lots of other startups gunning for that as well. The thing to note, though, is that you never had virality on mobile, so you don't have that same speed that you can build a huge player base and hold on to them that Zynga was able to do on Facebook early on.
And when you say virality, what exactly do you mean?
So when you play the game, every action you do, posting on a feed somewhere, and then eliciting other players to play, invites flying around, almost, you know, some people say it's like a spam cannon, right? Telling everyone, come play, join my mob, join my farm. You don't get that same dynamic effect on mobile as easily.
Now, Zynga is also now trying to get into China. Obviously, Facebook, Twitter have failed there because they've been shut down by the Chinese government. Is Zynga the kind of company that could succeed in a place like China?
I think they could do well with partnerships. In China, traditionally you enter through partnership with a local incumbent, but historically no U.S. internet giant has ever succeeded in China. We're talking Google, eBay, Facebook, all these folks. Instead, the local incumbents are the dominant platforms, and if you partner with them, you may be able to bring content in and publish through them, but it's a very different game out there. Tencent's probably the dominant Facebook equivalent, but imagine if Facebook were to make games themselves and potentially compete with you here. That's what it's like out there. It's different. It's not a pure platform that is completely open for third parties, if you will.
Are there any other kinds of internet companies that you could see succeeding in China? U.S. internet companies?
You know, potentially data mining, advertising technologies, things that use analytics that, you know, perhaps entrepreneurs there haven't picked up on quite as much yet, enabling technologies. So far, we're not seeing it on e-commerce. We're not seeing it on things like search. We're not seeing it on games yet. World of Warcraft has done well there.
All right, Tim Chang of Norwest Venture Partners. Next time you come back, I want to talk to you about Chinese companies succeeding in the U.S. All right, thanks so much again for joining us. Yeah.